Hey, what's up, everyone? Today is November the 27th, 2018. It is a Tuesday, and we did make one trade today here in IYR. Now, IYR is a security that I tend to really like trading. Okay, so I tend to trade IYR pretty regularly, and in almost every expiration month, IYR is going to be in my portfolio. So as you can see, we sold the 80 call and the 80 put. We bought protection at 85 and we bought protection at 73 for a total credit of $3.08. As you can see here in this right here, we have a good till canceled order for $231 to get 25% of the total credit that we received. Okay, let's go into our Analyze tab, and there's some really important lessons here in our Analyze tab. Okay, so as you can see, we have our center strike here over the 80 call. Now you're going to notice that the risk diagram is a little lopsided, and I'll show you why here in just a second. Okay, so you can see here at 85, which is where we bought protection, it evens out, right, in the iron butterfly fashion. You can see that we have a total of $576 worth of risk on this side, and we have a total down here of $1,176. And we keep going down. So rather than 75 and an even iron butterfly, we go down to 73, and we have more risk over here. Okay, so this is a chicken wing iron butterfly or a broken iron butterfly, whatever you want to call it, right? But it just goes to show that our risk diagram is going to look different, okay, because we're not exactly centered. We have more risk on the put side than we do on the call side over here. Currently have a probability of profit of 47%. I think that at December the 4th, we get up to 50%. We're going to manage early. We're going to manage this position, potentially ladder into this position. And so it's very likely that we have a much higher probability of profit than the 40% that it is currently showing. Okay, so let's go into our trade tab, and I'm going to show you exactly why we have more risk on the put side than we do the call side. So over here, as you can see, almost immediately, option prices on your call side are significantly less expensive. And so you see right here, we bought protection for about 11 cents, okay? And we're $5 out, and they're worth 11 cents. $5 out, so 75, rather than being worth 11 cents, as you can see here, they're worth 54 cents. Okay, and so we have significantly more value in our put options than we do our call options. And so I could have went out to 87. However, it really wasn't worth it, right? So it really wasn't worth it because I'd only get 7 more cents worth of credit. Right, so 11 to 4, I'd only get 7 more cents worth of credit for $2 more in risk, and that's just not worth it. Right, whereas here, 54, right, if I would have been at 75, right, 54, well, I go $1 out and I get 13 more cents worth of credit. Right, and then I go another $1 out and I get 9 more cents worth of credit, and that's really my threshold, right? I want to see about 10 more cents every time I go out another $1 of risk. Right, 10 more cents worth of credit for another $1 worth of risk. Okay, and so that's why. And so this goes to show that you're often, in some of these iron butterflies, they might not always be even, right? Depending on what kind of IV there is. And we had pretty good IV here in IYR because we had 40% IV, which is actually really, really good. Right, and so, but that just goes to show that there's going to be more risk sometimes on different levels. Okay. And so go back here, you can see that our option prices are worth much less on the call side than they are the put side. And that's representative of most securities that you're going to trade. Okay, most securities that you're going to trade, there is going to be more option value on the put side. And so your puts are going to be more expensive when you go to either buy or sell those options. Okay, pretty easy today, but it is worth taking a look at our risk diagram here in our Analyze tab. And if you're not in Thinkorswim, I certainly encourage you to do so. But yeah, I definitely would consider doing this for every security that you trade. Okay, every single security that you trade, you should have a risk diagram for and kind of know where you're at. Because really, I'm not going to look to add to this position until we hit 83 or 77. And if we just go back and forth between my short strikes and my break evens, which are represented by these lines right here, then I'm not going to do anything, right? And so that's why we have to, that's why I love this particular thing, because it lets me know when I'm reaching those break evens. All right, that's it for today. I'm going to be doing our daily market recap. I'm really interested in oil. Okay, so for those of you all that are interested, I'm probably going to add a position in oil tomorrow, and I might even buy stock. Okay, I might even buy stock in USO in my daily market recap where I go over the total market. You can hear exactly what I'm going to be thinking in that particular video. Okay, so stay tuned for that video. If you have any questions, please feel free to reach out to me at Ryan, RYAN, at SellThatOption. And as always, stay humble, stay hungry, and here's to our success. Awesome. So what you just saw was an example of a video that I send every single evening that I make an opening trade, a closing trade, or an adjusting trade to the members here at SellThatOption.com. I sincerely believe that when it comes to the stock market, right, there's so much misinformation out there that you have to have somebody, at least at the start, teaching you and guiding you and really getting you the behind the scenes information and really into the mindset of somebody that's figured it out and is successful. And so not only do I send a ton of educational content, I mean, I have these courses right here. I send the daily recap videos. I send the weekly strategy videos. I've got general knowledge base. I've got Udemy courses, right? But I want you to, when I'm able to talk about, right, the trades that I make and why I was making the trades that I was making, that is true education, right? That is education that it's not just me sending out what I'm doing and expecting you all to blindly follow that, right? That's literally the opposite of what I want to do, right? That's not what this is about. This is about true education. It's about truly teaching and saying, hey, this is what I was thinking. This is what I was seeing. And I sincerely believe that that's one of the most effective ways to really learn how to do this. Now, what I'd like for you to know is that first, visit my site. Go here to Stock Trading Services. If you'd like to join, right, use discount code YouTube, all lowercase, YouTube, and that's going to get you 50% off all of my services, okay? So, again, discount code YouTube for any of these potential stock trading services. So you're going to get my lifetime membership, 50% off, right? Yearly, quarterly, monthly, 50% off with the code YouTube. Follow me on social media via either on YouTube or in Twitter or on my Facebook or on my Instagram. Follow me on my social media platforms that you can see right up here in the corners. Okay, YouTube, Twitter, Facebook. I'll add Instagram on there. But again, discount code 50% off YouTube. All right, if y'all have any questions, please feel free to reach out to me at Ryan, RYAN, at SellThatOption.com. Again, 50% off code is YouTube, all lowercase. And if you have any questions at all, reach out to me. Otherwise, stay humble, stay hungry, and here's to our success.